Ntsika Ntsokolo from Sasfin Wealth joins us now for a look into the day's trading session. Ntsika, thanks so much for your time today. Commodity is really the big story this year, and we've been seeing those big commodity prices, precious metals in particular, really rising and hitting record highs. I want to ask you about silver, though. It's been one that's been forgotten and really rallying today with gold hitting record highs, right? This, of course, on the back of the geopolitical tensions, we are seeing an increased safe haven bets. Besides that safe haven bet, though, are we seeing more investment into silver because gold is getting so expensive?
Good evening, darling, and thank you so much for having me on. I think, no, certainly we've seen a huge rally in what we've seen in the silver prices, compared to what we've traditionally seen, and seeing price performance that really is irregular. I think we're currently sitting at around $90, with some bulls pushing it as high as $100 per ounce in the near-term future. And I think, to your point, it's one from a substitution perspective, as gold producers and jewelry producers have to use less and less yellow gold and look to other substitution metals to also keep to create things like white gold and the like, or looking to substitution metals to actually do the crossover. And as well as silver, we must always forget that silver isn't a commodity you can mine directly.
Yes.
It's really a byproduct you get from your PGM as well as your gold mining. So the rarity and projections of how much is actually out there and what can be mined is quite is not certain at the moment. And so I think definitely seeing a rotation, as we've seen the kind of top end of the gold price that he had 4,600. We're also seeing a rally there in the silver price.
And over in the U.S., earnings season picking up. Bank of America, Citigroup, as well as Wells Fargo out with numbers today. We saw Bank of America and Citigroup topping profit estimates, while Wells Fargo's numbers were a miss. Just your take on those earnings we got out today. I noticed that the banking shares were in the red. I'm assuming that's just on the back of the sour mood we are seeing globally.
Oh, certainly. So we got results both out of JP Morgan yesterday and Bank of America today, as well as Citigroup. And I think what's been interesting is both from Bank of America and certainly from JP Morgan, we're seeing a very robust narrative around the U.S. consumer. Both, Brian Moynihan and Jamie Dimon have both spoken about the ongoing consumer spending strength and the solidness of the credit fundamentals that are going on. And perhaps just to touch on the Bank of America results that came out today, I mean, revenue or net income came in at 7.6 billion, which is ahead of analyst expectations. Earnings per share also came in around 98 US cents, ahead of analyst expectations, around 96 US cents. And certainly the sales and trading division up 10% from the year on year. And I think, again, this is due to volatile markets, Liberation Day and things of the like that really bolstered the friction within the market and specifically within fixed income. So a very solid set of results, which is why we're perhaps a bit surprised to see Bank of America down as much as 4% today. Yeah, but I think very much in line. I think it's probably a buying opportunity both for JP Morgan and Bank of America at this moment. Citigroup posted an interesting set of numbers themselves, about a 13% decline in terms of net income, like for like on a year-on-year basis. And this was mainly driven by the $1.1 billion loss that the group incurred from exiting their Russia business and the once-off associated with that. But with regards to actual organic growth, the group looks very, very good. I think you get a return on tangible assets around 8.8%, with the credit loss provisions, credit losses down over 20% this year. So Jane Fraser and the turnaround plan at Citigroup certainly playing out. But I think what's going to be painful are those 20,000 jobs we expect to see lost by the end of 2026.
And what are you making of President Trump's plans to potentially cap credit card interest rates? We did see an announcement out from, not necessarily an announcement, but JP Morgan's CFO really pushing back on those plans and speaking on the kind of impact that would have on, I guess, the bank's borrowing capabilities.
No, certainly. I think the policy is broadly, if he does execute on it, is a populist. It's very populist, right? It's not grounded in the fundamentals that these businesses are built on. And I think the comments from most of the banks is that if he chooses to cap interest rates, the banks will just lend less credit retail in order to protect their balance sheets and their income statements, because they are ultimately accountable to shareholders. So I think it's a very populist tone to speak to, to try capping credit card rates, even if it is for a year. And I think it sets a pretty dangerous precedent. But I think President Trump is not scared of dangerous
Yeah.
presidents, it seems.
I mean, we've seen it over the past year or so. He is not afraid of anything or anyone. I want us to look at Northern Platinum's update before I get into your stock pick, delivering a positive production update on that front with PGM output up 3.7%, chrome in the meantime up 15%. We're also seeing operational improvements on that front. I can imagine that the PGM rally we are currently seeing will also give that company a boost moving forward.
No, certainly. So Northern came out with a very solid set of results. The stock closed up about 2.5% now for the day's trading. And if you look at it on a 12-month basis, the stock is up over 260%, to give our listeners just an idea of just how well the platinum prices have done. And to your earlier allusions around the increase around refined platinum production of these last 6 months. So the Eland mine, which has really been the star of the show, I think that saw an increase around 44.7%. Or increase in terms of tonnage, in terms of total production out of that Eland mine. And again, Zonderreint and Boysendal also coming through with very solid production numbers. And what we're seeing here from Northern, I think, which we like as investors, is in an opportunity or in a market where, again, your commodity is doing very, very well, they're able to match that and actually increase production and increase and bolster earnings. So we're very proud of what, Northern has been able to do. But, I mean, one always asks, when will this rally actually end?
All right. So you like Northern, but that's not your stock pick. Where are you seeing value at the moment?
Might be a slightly more controversial one, but core potash. So core potash, I think the gem of the investment case is the asset that they have out in Congo, which is the lowest cost producer for potash across the world. I think the pit to mine is about 35 kilometers, give or take. And at the moment, the group is kind of vying for a capital injection of around, I think, $3.2 billion. And whilst it sits on a market, also around $2.2 billion, and it sits on a market cap of around 3 billion rand. So if achieved or when achieved, I think the capital injection will do massively for how the group is able to produce. And I think you're seeing it in the share price action today, up about 10%, because I think we're seeing one or two filings that allude to institutional interest within the stock itself. So one that perhaps you can't put in the funds for our clients, but for our retail traders, we think could really offer some value in the short term.
All right, let's leave it there. Thank you so much for your time and taking us through the day's trading session. That was Ntsika Ntsokolo from Sasfin Wealth.